The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 5th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a wonderful Wednesday. Let's make sure that you and I do everything we can to have a terrific Thursday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. We make that one little 2x4 exchange out there, folks, and it is a beautiful thing out there. Of course, it's really a beautiful thing for you to be with me this morning. I'm honored by your presence. I'm here to serve you. Feel free to pick up that phone and call in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Thursday. Of course, it is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up about 41 points, trading out of 18,128 or so. S&P futures up nearly 5 points, trading out of 2101 and a quarter. NASDAQ up about 11, trading out at 44.55. Russell 2000 up a couple of points. The King dollar on the move. I got a 10-minute delay on that, but it's up 289 ticks with Mario Draghi on the stump. Speaking, though, that could be off just a bit. The euro, we'll take a look at that. The euro, we're going to take a look at all the currency pairs. Gold is flat this morning, trading out at 12.01. Silver's up 6 pennies, trading out at 16.22. Light sweet crude back 65 cents or so, trading at 50.89. So, Mario has been on the stump, I think, for a bit out here, so he hasn't really moved much in the way of gold. In the case of the euro, let's start off with taking a look at the euro. Then we'll go take a look at the markets overseas out here. I just was putting this chart up on my screen here as I was coming into the opening of the show. What I noticed here, this is the Euro future contract, and I've got the monthly chart up on my screen. And what I noticed here was a very clear descending price channel. Number one, there's several A to B equals CD to the downside patterns that are being fulfilled when we take a look at the euro. We can see right now the most recent one inside the euro futures contract out here. It's below the 1-to-1 A to B equals CD. That says that it's heading lower. Now, it's likely to find support right down around the bottom of this descending price. Doesn't mean that it will. Doesn't mean that if it breaks out, we can see that intra-month, intra-session, because it's a monthly chart, we can see spikes below that. Of course, the body of the candle is truly the essence of price out there. So it looks like, price headed down in the euro in the futures contract right around the 103.2 level, somewhere right around there. Probably settles back up above the descending price channel. Doesn't have to, but perhaps it does. Perhaps it does that. Well, we do know about the euro. If I go back and take a look at the euro-US dollar daily chart out here, let me switch back over. Here, what we know for sure is that on a daily basis is that price broke below that swing point from January 26th out there. So broke below that, you're still below that, and that just simply says that price likely to go down to the next low, which is really about on a daily chart out here. The competition is going to be the 0.786 retracement level from its all-time lows out there. So that says we could also see price get down, spike that 99-cent area. Now, that's what it looks like on a daily chart. It'll look like that until we see some kind of bullish reversal signal. Of course, that can happen in the next 10 minutes out there. But as we speak right now, that is not what is in play. Now, what is in play, if we go take a look at the DAX, the DAX is up 117 points here this morning. The DAX, as we pointed out, oh, what the heck? There we go. The DAX here is now up above the 1 to 1.272 A to B equals CD. So 3 days ago, made a little doji candle right at that level. We don't have any left side resistance out here, right? Once you're up at all new time highs, there's really nothing on the left side of the chart, which really means there's no supply lines, right? There's no areas where people are trying to get their money back and things of that sort. That's why things that are at all-time highs, they've got the freedom to run. And then we've got to use our tools, such as our lightning bolt pattern, such as our A to B equals CD pattern, to help us identify where price is going to. So we had a doji candle on March 2nd. You had a little key reversal, bearish engulfing evening star pattern. That took place on March the 3rd. The top of that candle, I don't know if it's the top of that candle doji, they're about the same, 11,465. Yeah, 11,465 became the resistance spot. Well, now you've got the DAX above that area, 11,504. So you've got money flowing into that, and that says that the DAX next price move, unless it closes back below the top of that evening star, again 11,465, that says the next price move inside of the DAX is 12,031. That would be your 1 to 1.618, A to B equals CD to the upside. That is what's going on inside of that equity. If we go take that index, I should say. If we go take a look at what's going on inside of the FTSE out here, the FTSE's up 37 points. Is that I'm going to go back to the other chart because I think I've got more of it, more notations on the other tab out here. So just that way I don't have to redo that work. Let me see if that is in fact the case. Give me a moment to find that. So, and what we're looking at here is we're looking for that consolidation level, that breakout. So here's what's interesting. I'm pretty sure we pointed this out yesterday. I know we did. And what we have out here, the number that's really important, it's important to me. I think it should be important to you too when we take a look at the FTSE, is that 68.75.62 level. That is the breakout from its consolidation. Now, that also is the swing point high that takes you back to May 22nd, 2013. That's that line of demarcation. Now, what markets will do, the importance of being able to identify the bullish and bearish resistance and support levels, the bearish resistance levels, the bullish support levels out here, is because when you have a change in polarity, it says that those old levels should now act in the opposite way. And that's really what we're paying attention to here in the FTSE. Now, the reason that we're paying attention so closely to the DAX and the reason that we're paying so close attention to the FTSE is because of the correlation that those two indices have with regard to our market, with regard to the S&P futures. Here's that chart as an example. You know, we can take this back for a while. We can see, you can just see that the directional aspect of what is going on worldwide, it's been around for a long time. You can see it's not a tick for tick thing. But it's really pretty darn good. It is really pretty darn good. So who's leading the tango in this? We don't really even need to know who's leading the tango here. What we do need to know is, hey, what's going on inside those other markets? So back to the FTSE out here and looking for the signals, because that's really what our role is, your role and mine. Now, this is a 800-point consolidation breakout inside of the FTSE. So that says staying above 68.75.62 gives you a price projection, a minimum price projection of somewhere in the 76.64 range. You know, don't use that to the tick out there, but that is the range of where the breakout ought to take the FTSE to. Big price move. Now, yesterday, when the FTSE broke above this level, it actually closed above that 68.75 mark on February 17th. Little doji candle very next day, so saying, I don't know if I'm certain about this. Came back, tested that 68.75 on the 19th, and then continued to move higher. Well, yesterday was the first test coming back and testing that level. So it's really, you know, test number 2, maybe test number 3 on the daily chart out here. Third time is a charm. What the FTSE now needs to do, like the DAX, let me go ahead and get rid of the retracement areas. We can always add those back in later on. What the FTSE also has, a series of small bodies and a couple of little, at least one doji, one high wave candle, a doji on February 27th, the high wave candle on March the 2nd. They both do have separate meanings out there. Nonetheless, that really becomes the area of pièce de résistance out there. That says that any close above 69.74.26, FTSE is not there just yet. reached 69.54. So any close above 69.74.26. And the FTSE is also saying that, hey, I have rejected lower price out there. So that is its message. That's its early message as we speak right now. But I think that that's important for us to take a look at. And that should be an influencing factor on what goes on inside of our markets eventually. Now, back to the currency pairs out here. Let's go back and take a look at what's going on. So inside the currency world, we also have the Japanese yen, which is moving. If we take a look at the Japanese yen, now it's been basically moving sideways. It's been in a sideways consolidation, you'd have to say, ever since the early part of November 10th out here. At least the bottom has formed, which inside the Japanese yen, the U.S. dollar Japanese yen, is down around the 115-ish type area. It has not taken out its highs. The highs out here are back on December 8th. Recent highs is really what I should say. That's at 121.84. Now, let's actually put this on a longer-term chart out here. Let's put this on a monthly chart. Let's take a look at what the Japanese yen has actually done out here. Let me pull this back even further. So as we take a look at the Japanese yen, and we just simply go and take a look at the highs from back in 1998, August of 1998, that was out at a price point of 147.65. And we come down to, I remember that because I certainly was traveling in Japan back then, and all the way back down here to October 1st low at 75.57. What we can see here is this currency pair has made it up to the 0.618 retracement level. Now, it did that with a nice wide-ranging bar. This is a monthly chart, the month of November 2014. So, cooled off just a bit in December, gave us a nice little bearish engulfing candle that next month in January. But that was completely erased in February out here. So the Japanese yen is really just kind of struggling up here at the 0.618 area. If we see any kind of price, if we see any type of conviction, bar-wise, wide-ranging bar, a move above, well, there's really no the resistance actually there is, because we had that monthly bearish engulfing candle in the month of January. It says resistance out here happens to be the high from December, which is at 121.84. We'll call 121.85. So any move above 121.85 on a closing basis pretty much says that what the Japanese yen wants to do is move up to the 132.26 area. Now, that's important, but it's also important for us to go take a look at this currency pair, the euro Japanese yen. This currency pair is the one that tracks the U.S. stock market better than any other currency pair out there. And if we go take a look at it, let me get rid of a couple of notations that are on here. Let me pull this back as well. And if we come to its highs, let's see. This is going to be all the way back in 1982. So I'm all the way back to 1982 out here. So if I go from that high down to the low in this currency pair out here right around September 2000, that's going to be one area for us to look at. Let me just also come back here and see what we've got. Give me a moment here. Come on, there we go. I want to take a look at two different retracement levels. That's assuming that the system will let me grab the points out here. Okay, so if we take a look at it, I want to go back now and I want to turn one off. So let me do this here. I want to turn off the longer term one. And then we'll take a look at the shorter term one first. So that would be, turn that off? No, turn this one off. Okay, we're going to do that when we get back from the break, because it's really important for us to take a look at what's going on inside this currency pair as well. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're master on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No real change in the futures market. Dow futures up 34, S&P up 3.5. So we're taking a look at the currency pairs. Let me flip back here to the euro, Japanese yen. Now, when I take a look at, let me just come back to the monthly chart. The monthly chart here, if we take a look at the euro, Japanese yen, off of its low, this currency pair back in July 2012, it's a monthly chart that we're looking at. So from the low to the high that was put in back here in December, we can see that prices made it down towards the 0.382 retracement. Now, it did it with a wide-ranging bar in January. That held off just a bit on in February. Not much movement inside the euro, Japanese yen in February, kind of like our markets, right? If we take a look at the month of February, kind of, consolidated type of a move out there. Right now, you've got on a monthly basis, you've got the euro moving a bit lower as we speak. Says that, pulling back to the 0.382 retracement level, 128.52, may really be in the cards as we take a look at this. But the key is going to be, when this starts moving higher, at least unless this correlation starts to become unhinged, and it hasn't for so many years that there's no reason to suspect that that's the case as we speak. So what the markets are going to need worldwide, that's including our markets. What the, I can't say worldwide, but what the markets are going to need is see this currency pair to begin moving higher as well. Now, if I take a look at the daily chart for this currency pair, we'll flip over to the daily chart and see what's going on here. And again, we're taking a look at the euro versus the Japanese yen. We can see at this stage here, still doing a retracement. It's still dealing with the swing point from January 26th. A little different than the euro. Come on, grab this, would you? The swing point low from the high out here. You can see right now it's below the 0.618 retracement level. So this suggests to me, to you, that price is likely headed down to the 131.55 area, maybe headed all the way back down to that swing point low at 130.15. Now, why is that important? Well, that's important when you then start to put things and keep things in perspective as to what's going on inside the markets. So if we take a look at what's going on inside the markets, we mentioned this yesterday while we were on the air. If we take a look at what's going on, and mostly the composite out here, if we take a look at the composite, because that's been the strong dog out here, is that yesterday, even though it made a nice little bounce back, a nice little comeback, when it ended the day, the NASDAQ composite price oscillator was still below zero. And when you get below zero, that's when you can start to see a change in trend take place. So it's really important. If you're watching us on TigerTV, actually, if you just take a look at the middle section of my chart out here, so if you look at the middle section, that's the McClellan Summation Index. And when that's not a guarantee. When price oscillator moves below zero and the Summation Index ticks down, it's not a guarantee that the trend has changed. But if you take a look, and you can see were some stutter steps back here between November 14, 2014, all the way up until about December. So for about 30 days, there were some stutter steps here. It was a little tug of war that was going on. But if you use this in general, if you're looking for indications of when a change in trend is going to take place, just look how well this worked back in the October timeframe. It's just another indicator, another somewhat early warning or leading indicator, or just simply it helps you to identify who's got the ball in the game. And right now, as of yesterday, as of this morning, even with futures being up a bit, it's still the sellers that are in control. Really key with regard to this indice as to whether or not the sellers are going to be able to continue to keep control today. But that's in trying to put things together with what's going on inside of the currency pair, inside of the euro-Japanese yen. So if we take a look at it, if we pay attention to it, it's not in full-out bullish blown formation out here. It itself is continuing lower. We know that the NASDAQ composite price oscillator dipped below zero. It joined with what already was taking place inside the New York Stock Exchange, so that was for a second day in a row. If we take a look at the New York Stock Exchange, moved a little bit further. Now, in the case of the New York Stock Exchange, it also formed a hammer candle out there yesterday. So that's worth noting and worth us paying attention to. In the case of the Dow, no hammer candle. In the case of the S&P 500, no hammer candle. Looks like a hammer, smells like a hammer, but the body of the candle is not twice the size of the wick out here inside of the Dow. Its price oscillator continuing below zero. So we'll see, between 9:30, 10 o'clock, and I'm not going to really put this on a time thing. It's really called the end of the day, because these charts here, these price moves are really end of the day tools out here. But as we speak right now, it's an indication that there's a change in trend that is in place. How long will it live? I don't know. Could it change by 9:35? Absolutely. But the real key is going to be, what does it look like come 4 o'clock this afternoon? So that's what's going on initially as we take a look at the markets, as we try to line things up. The other key level for us to be watching inside the ES Mini is 2099. 2099, folks. That is a key level of support or potentially resistance. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 19 points, trading at 18,116. S&P up 2 at 2,100.78. Composite up 12 at 49.76. Russell is flat this morning, trading out at 12.30. The DAX up 96. The FTSE up 32. Gold's up $1.30. Silver's up 8 pennies. Light sweet crude back 47 cents. Leading the charge, the upside, Pharmacyclics. I think there's a merger buyout, AbbVie to acquire them. That's up $24, a little $24 premium this morning. Kithera Biopharma, that's up nearly $9. That's up 20%. Mallincourt Publications up 6%, up $6 and change. Receptos Inc. up 6% at $7 and change out there. BioMarin Pharmaceuticals up $4. Costco Wholesale up a couple of percent, up $3. To the downside, Embraer, the airplane manufacturer out there, that's off about $3.60. Joy Global, haven't looked at that stock in what seems like forever, down about 6.5%, off $3. Capania, that's down 14%, off $1.25. Caterpillar off $1.25. Darling Ingredients down $1.25 out there. 1-800-Flowers off $1. Diamond Resorts down 80 cents out there. Okay, so now let's come back. So we really, we took a look at the markets. We took a look at the fight that's going on, the struggle here between Europe and the U.S., right? The European stocks, we got the DAX moving higher. We got the FTSE having tested a consolidation level. We've got the Euro-Japanese yen moving a bit lower out here. We've got key levels for us. So we've got the composite summation index, which had turned down yesterday. I'm not even going to go really pay attention to it here with 6 minutes into the trading session. It's just kind of futile. 2099 becoming another key level that I'd mentioned inside the ES Mini. It's trading at 2098.50 out there. So that's a key area for us to be watching. Really, there's nothing else left to do other than just clutter up our minds. So I say let's just go out to the beach and have a good day. What do you think? Oh, it's not beach weather where you're at. I'm just kidding. Let's take a look at, I haven't looked at Apple here for a while, so let's go take a look at the big Apple out here, AAPL, down 60 cents. So they got this watch coming out. Do you have your order in? I guess you can't have your order in for the watch out there. That one's a hard one to figure out for me. Even the watches. Look, I maybe I'm not the most artistic guy, kind of a plain, kind of a guy out there. But do you think the watches that they show on television are attractive? Now, I don't know about you, but I got these, fat digits, these fat fingers out there. And I just can't imagine, how hard it is just to actually hit the letters when you're typing in on your phone out there. At least for me, it is. So, really the whole watch thing is just kind of, to me, it's just mind-boggling that that's going to be the next latest and greatest out there. In any event, what is it that we know about Apple as we speak right now? If we take a look at its stock chart, it's up above, it's right about the 1 to 1A to B equals CD. It got above that level. No real reversal signal to speak of here. It's just really moving sideways. We know that it's trading in a tight trading range. Al, I don't know what to tell you right now. In a tight trading range out here. It's got support at about 127.24. The resistance level is at 129.63. Out here. So until it probably breaks its TAS market profile low, 127.43, it just continues to hang, probably hangs out at these levels until the watch comes out or whatever the big party it is that they're throwing out there. And, it should be a nice little party. I wasn't invited, probably because I'm not their target market. I'm not going to be the guy that's going to be wearing the watch. Even if they gave me one, it would just simply sit in the drawer out there. Let's take a look at some of these stocks here that are moving and grooving. Let's take a look at Embraer, or ERJ is the ticker symbol. Let's see. I don't see their numbers or anything along those lines, but gapping down big time. So this thing, boy, gapping down, taking out a swing point and doing it already with volume. That's a swing from January 20th, which had 717,000 shares. You're already down with 779. We're seeing it try to fight its way off of the bottom as we speak. Let's go see what else this thing is pulling back into. That's not a very pretty picture, meaning that for my chart, doesn't give me a whole lot to look at. So let's switch over to a weekly chart out here, see if we can get a better view of what Embraer is. So now this is moving down into a swing point. That swing point out here. Now, what's interesting about this stock chart is it does have a weekly volume swing low back in July of 2012. There were about nearly 12 million shares for the week that began July 9th. Now, the top of that is 26.44. It's got potential support. It's trading into this swing point right here from the trading session that began October 28, 2013. So until this closes above 32.98, the likelihood is that this is going to go test 28.31. And if it starts moving down there, which it looks like it really, well, it's it's Thursday. So it's Thursday. We're at 5 million shares. Depends on what it does today. That swing that is trading into from October has got about 10.5 million shares. But volume, if it does keep up, pick up here. Let me put the daily up here. I think it was around 700,000 shares. So if it does really pick up 800,000 shares so far, that is probably where that equity is going to head to. Again, that ticker symbol there was ERJ. Let's go look at Joy Global. Used to be ticker symbol JOYG. But switched over to JOY. If we take a look at Joy Global, gapping down this morning. Volume behind the move, 807,000 shares. It too taken out a swing point. Its swing point that is taken out is from January 28th. That had 1.4 million shares. Time for us to put this thing on a larger, well, let's take a look at the A to B equals CD pattern first. Let's look at the daily A to B equals CD pattern, get a feel for price targets on this. So I'm going to use my A point, the high from August 27th. My B point down here, October 3rd. These are the 2014 levels. And as my C point, looks like November 2014. So it is now a gap down into the 1-to-1 A to B equals C. That is not how you like to form a D point. This would suggest that Joy Global headed to about the 35.42 level. Now let's take a look at a weekly time frame. Let's go see if we can find anything out here that this might be trading into. And the answer is no, not really. Now, let's take a look at retracements. Let's take a look at a retracement from its low all the way back in 2008. So from November 17, 2008, that low was 1430, all the way to the high that was put in back here in 2011, March 28th. That is suggesting that where price is headed to is about 33.38. That's your 0.786 retracement area. So that's that's another price objective of where it looks like Joy Global is headed to. If we look at let's go see what's going on with Momo, MOMO out here. They've got fourth quarter losses, less money, but that's nice. Let's see, what do they do here? Looks like their fourth quarter net loss to shareholders, 5.5 million versus 10.5. Okay, so they just lost a little bit less money. Oh, this is a well, let me hold on here. What is this? Momo. This is a maybe it's an IPO. Yeah. Not too long ago. It looks like everybody that got into Momo is Momoed. They're Momoing. This was an IPO from December the 11th. How would you like to be the individual that bought it its high at $16.27, and already right now you're down at $10.82 out here. So not looking good. Not a ton of data for us to look at. Hey, speaking of that, we looked at Alibaba the other day. Let me go ahead and put that on our chart. We were noticing when we looked at it that every shareholder was out of the money. Every shareholder was in a losing position. We saw a little bit of a bounce back yesterday. Now, yesterday, a nice little bullish engulfing candle session. But here's what's kind of interesting is price made its way back up to the resistance level of its TAS market profile, 85.92. Now, if price can get into 85.92, it would suggest that it might gravitate up to 87.97. And if it can close above 87.97 out there, that would suggest that a change in trend could be underway inside of Alibaba. It's got some areas of resistance out here, like this last gap between January 28th and the 29th. And that's a fairly wide gap. The low, or the top of the gap, I guess one way of saying this, 97.79, and the bottom of the gap is 90.74. So you got about a 7-point move out there. This needs to prove itself, I would say, to get above that 85.92. That is on Alibaba out there. Again, everybody basically, well, not everybody in the red anymore inside of that equity after yesterday's moves inside of the markets. Now, so that's taking a look at some stocks moving to the downside. Let's go take a look at something moving to the upside. Hey, let's go take a look at Biogen, BIIB. Now, this thing here is at all-time highs. This thing has 110,000 shares today. Let me pull this back. Let me see what kind of pattern. There's an A to B equals C. Well, there's several of them out here. Several A to B equals CD patterns. Let me put this on a little bit longer term basis. Let me look at a monthly chart for Biogen, BIIB. Oof, boy, what a rocket ship this thing has been, huh? Something like this, I don't really know how to give you any kind of price projections on this. That would provide you with any kind of provide you with any kind of clarity. It's at $422.11, and basically everybody that owns this equity is in the green out there. So congratulations if you are the owner of Biogen. You've got Receptos, that's up 5.6% up here. Ticker symbol RCPT, that's up $7 as we speak. Let's take a look at it. This is trying to take out a resistance level that was created by this little bearish engulfing. May have been a key reversal session as well. I don't know where it was in the overbought status. Let me actually turn on another tool here. Let me turn this on. We'll take a look at its relative strength. And yeah, it was in a overbought. So this is trying to take out a key resistance area, which is at 139.40. Now, volume on that trading session from December 23rd, holiday trading was 970,000 shares. You're at about 200,000 as we speak right now in the first 45 minutes of trading. Look, any close above 139.40 today, that would be nice and bullish for this equity, RCPT, and say that it would move up to the next level. If we look at also moving to the upside out here, let's see. How about some? Let's look at Costco. I see somebody maybe typed in Costco. Did they get their credit card partner? Mr. Bill, yes. I believe they signed deals with Visa and somebody else out there. That's my recollection a couple of days ago. But, the credit card thing's not going to. People aren't shopping or not shopping at Costco, I don't think, because of a credit card that they can use out here. I think people go to Costco to get some pretty good deals out there. Now, Costco gapped up this morning. Volume so far, about 758,000 shares. The swing point that it's trading into has got 11 million shares, 11.3, and that was from February the 4th. So that's a nice, it says that that's a high volume high. It says at a minimum that gets tested, and that's exactly what is taking place today. Now, if we can take that out and do it with volume, that would be really bullish out there. That would be really bullish. In the case of Costco, when they lost American Express, when was that? I don't see any really significant drops out here inside of Costco's stock out here. Maybe it was December 10th, but I don't really see anything here when we take a look at Costco. In fact, let's put this on a little bit longer term time frame first. Let's just switch this over to a weekly time frame chart here for Costco. There's just nothing bearish about this equity at all. Really nothing on the weekly chart. There's no resistance or anything along those lines, other than the high volume high that was out here from the week that began February 2nd, 36 million shares out there. But otherwise, looks like all systems are go in the case of Costco out there. Let me take a look at what else we have moving here. Not really too much of any significance. So that says in the next 2 minutes we should go look at something else. So what haven't we looked at? Well, we haven't looked at gold. We haven't looked at silver out here. So let's go take a look at it. You've got gold is up a buck right now. Is that a big deal? Hey, today, welcome to Full Moon Thursday, by the way. So, Full Moon Thursday, that says, today, tomorrow, probably tomorrow is when we get some type of decent indication as to whether or not gold's going to try to break this descending price channel, or whether it's just going to continue with inside the price channel and push lower. And by lower, I mean go after the 1168.40 level out here. Maybe even at least go test the swing point low, which is the top of November 7th, which it has not done. That's at 1179. So no bullish action that we see, no bullish reversal signals that we see in this descending price channel. All we see is things just kind of hold. And usually after somebody keeps their thumb, not somebody, but a group of buyers and sellers keep their hold on Goldilocks for a period of time, there's usually a blast. And maybe that's going to be courtesy of the full moon that we are dealing with out here. In the case of silver, if we go take a look at high-ho silver out here, up 6 pennies, trade out at 16.26 at 2, is in a descending price channel out here. Silver is trading back into that swing point from December the 1st out here. And so as long as you're in that swing point, says, hey, there's no reason that it can't go test the low, $14.70. I'm not saying it's going to go test the low. But, folks, there is nothing bullish about the stock chart here for silver that I can identify. And if we take a look at retracements from low to high, we ought to do that. It's holding at the 0.618 area. So that's the best thing that we can say about silver, is that it's holding, in gold, is that they're holding at the 0.618 retracement level. But otherwise, it's in what it is, which is a downtrend. And until it breaks that downtrend, you have to expect lower prices, or you should expect lower prices out there. Now, I said that 2,099 level is an important area for us to watch. Right now, you've got the ES Mini at the 2099.50 level. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 46, S&P is up 4, Composites up 19, Russell's up a couple of points, and we got a couple takers, some folks that want to go out to the beach today. So why don't we just make today a beach day? Hey, even if you are up in the Northeast where it's nothing but snow, it's not a bad day to head to the beach, right? There's never a bad day when you head to the beach. So why don't we do that? We should be able to just do the show from the beach, don't you think? Yeah, all day long and every day. Of course, we ought to just, so send those emails to Tom. Let's make sure that we're going to all the great beaches around the world out there. That would be something. In fact, we'll just make it a big old TFNN party. So just make it so you guys will just all be the roadies out there, right? Of course, I'm the main roadie out there because I've got the name for it. But that would be pretty cool. All right, so back to these markets out here. Now we were talking, or mentioned Costco and then the American Express and Visa. I think I was saying it, or I was just typing in the den. But the question came out about Costco and Visa, and I was just making a comment. If we take a look at the chart on Visa out here, if they did really secure the deal with Costco, there's really no movement inside of its stock chart. Now, not that that means anything, doesn't mean anything bad. I mean, if we take a look at Visa on a monthly basis out here, let's put this out here, and it's a great looking move off of the lows from back in the 2009 timeframe. It's gone from what, $40, and you're $273 as we speak right now. The reason why we're not going to see, or we haven't seen any kind of a pop, or would make sense to me, I don't know if you've ever run a retail operation, owned a retail store. If you use credit cards, you're paying that cost. Now maybe you're passing on to your customers because you've got all these costs that you've got to recapitalize somehow and send and charge somebody. But in the case of Visa, even a small type retail operation was paying a little over 2%. Large retail operation, like a Costco, a Walmart, a Sears, a this, a that, where are they at? 1.5%? I mean, if they had to cut Costco a deal, how much margin could there really be in it? They're going to make it up on volume, though. This is Steve Rhodes with TFNN. Have a great Thursday, folks, and I'll see you in a few hours. No, I'll see you in about 10 minutes.